Your component costs are rising, your supplier lead times are stretching, and the disruption from the Middle East conflict is not over yet. In this video, I explain a 5 billion ringgit government facility that Malaysian manufacturers can access right now to protect their cash flow. I'm the digital avatar of Ayah Jacky Lim. He is a professional engineer and has been in the industry for over 20 years. While Jacky is busy working on the ground, he created me to deliver the practical guidance he experienced himself. Are your raw material costs rising? Are your suppliers taking longer to deliver, or have some stopped delivering altogether? Is your production line feeling the pressure from disruptions linked to the Middle East conflict? If you answered yes to any of those, this facility was created specifically for you. Bank Negara Malaysia launched the SME Stabilization Relief Facility in April 2026 to help viable Malaysian manufacturers weather exactly this situation. It is a 5 billion ringgit working capital fund deployed through 18 banks across the country, and it is open right now. There are 4 conditions you need to meet. Your business must be a Malaysian SME or micro-enterprise with at least 51% Malaysian ownership. You must be materially affected by the West Asia conflict through trade or supply chain disruption. That disruption must have caused real financial stress on your operations, and your business must still be viable. Bank Negara requires this, and your bank will assess it as part of the application. The key phrase Bank Negara uses is materially affected. In practical terms, that means your costs have risen, your suppliers are delayed or unavailable, or your cash flow is under strain because of what is happening in the Middle East. Your bank will determine what evidence is sufficient, engage them early. Here are the 3 numbers that matter. You can borrow up to 750,000 ringgit per company. The maximum financing rate is 3.75% per annum, and that rate already includes the guarantee fee. The maximum repayment tenure is 5 years. At 3.75%, this rate is significantly lower than standard commercial lending. I recommend comparing it against your current banking rate before you apply. The financing is for working capital only. That covers inventory purchases, operating expenses, and keeping your production running. It does not cover refinancing of existing debt. One of the most important features of this facility is the 80% loan guarantee provided by either CGC or SJPP. Here is why that matters to you as a manufacturer. Many SMEs do not hold enough fixed assets to satisfy a bank's collateral requirement. Bank Negara provides up to 80% guarantee coverage through CGC or SJPP, which reduces the bank's exposure on your application. That said, approval still depends on the bank's credit assessment of your specific business situation. The guarantee improves your position, but it does not guarantee approval. One more thing worth noting, the 0.5% guarantee fee is already built into the 3.75% rate. There is no separate charge on top. Applying is straightforward. Go directly to any of the 18 participating financial institutions. CIMB, Bank Rakyat, and SME Bank are confirmed participants. Commercial banks, Islamic banks, and development financial institutions all participate. Before you visit, call your bank and ask specifically what documents they need for this relief facility application. Each participating bank may have slightly different requirements. At minimum, expect to show your business registration, recent financial records, and evidence that your operations have been disrupted. The bank assesses your application and makes the approval decision. If you are already struggling with an existing loan, do not wait until you miss a payment. Contact your bank now. Banks can restructure, defer, or adjust repayment terms. If you need independent financial advice, AKPK provides free advisory services for SMEs. Applications opened on May 15, 2026 and run until December 31st, 2026. But there is a condition that matters more than the date. The facility closes when the 5 billion ringgit is fully utilized, whichever comes first. In my view, based on how similar Bank Negara facilities have moved in the past, I would not assume this will stay open until December. If your business qualifies, apply early. The further into the year you wait, the higher the risk that the allocation is already committed to other businesses. Jacky reads every single comment. Has rising cost of materials or supply chain delays affected your production line this year? Tell me what your biggest challenge is right now in the comments below. The Bank Negara facility links are also in the description. See you in the next video. If you found this video useful, support my work by hit the subscribe button and turn on notifications. Your support helps me keep going.